And last week, David, you called me. You were very excited. Faber, I've never seen anything like it, ever. It's the craziest ever. Tell our viewers what it is you're seeing in your numbers and what it may mean.
That is true. I did call you all excited last week because, as you know, the second quarter is almost finished. It's not finished yet. So, in fact, we probably have another week or so. But what we do is we collect all the data. And suddenly, you know, I'm seeing when you add it all up and see all the retailers together, you're seeing major increase that I think no one expected. And I say no one expected because what's interesting, we counted, roughly 2/3 of retailers have bad sales. 1/3 have good sales. But those third are so big and they way overpower the 2/3. So there's a lot of news out there about, you know, bad retail, Macy's struggling, Kohl's struggling, et cetera, et cetera. So you don't quite get the big picture. But David, when you add it up, we're looking at a 9.5% increase, 9.6% increase in total sales for the quarter, which is like unprecedented in the 19 years we've been doing this.
Yeah, that's almost a double digit. I can't ever remember that number, and I guess you can't either,
Never.
David.
Never. I mean, the highest we ever got was in the high sevens and maybe 8, you know, in Q4 17. That was the highest. I mean, this is off the charts high, like off the charts high. And I, you know, I got all excited with you last week and the week before as I was seeing it. And you've already seen strong employment numbers. You've seen strong supply numbers. And I think that you're going to start seeing some strong numbers on the back end of the economy. And I think this has major implications for what's going on out there.
So tell me what you think is going on out there. I mean, you make the point. The bigger seem to just be getting bigger, though, David. It's not necessarily being evenly distributed in any way. I would assume the names we know well, many of them that you talked to us about years ago when you first sort of introduced the thesis about Amazon and Apple and Samsung. Are they the beneficiaries?
Yeah, I think 4 or 5 years ago we were on and we introduced the thesis of SAAs, you recall, Samsung, Apple, and Amazon. And we felt that those guys were going to be taking over market share in a big way. So we started including them in our numbers. And of course, with Amazon, you have to gross up the numbers. You can't just take the Q numbers because that's not including the third-party total sales. And so when you add those in, right now, you know, you're getting 75% roughly of the total sales growth in the United States is coming from those, you know, from those companies. But then when you really add in the fact that a lot of other retailers like Walmart and Target, they all do well in the internet. Probably everything's coming from the internet right now. But at the end of the day, David, it doesn't really matter. It's a zero-sum game in retail. And the fact of the matter is that the consumer is spending at this incredible rate of 9.5%. I mean, now to put that in perspective, and I think you've got the chart over there, the prior quarter was about 3.5%.
Right.
And then the prior quarter before that, you know, was about 6% range. You know, so which is strong on its own, by the way, the 6%. The 3.5% was, you know, when the epidemic first happened and everyone was kind of shell-shocked and blah, blah, blah. But now you're suddenly seeing spending in home building and home goods, anything to do with the home, anything to do with food, groceries.
Right. Well, David, people aren't traveling. They aren't going out to restaurants as often either. I mean, I would assume, as we kind of have known, and we're seeing the evidence of it, I guess, that a lot of that money is going towards purchases. And as you point out, many of them being things that you would to renovate your home or buy furniture or whatever it may be, improve things. Yeah.
Exactly. So that 9.5%, I mean, we can get excited about it, but, you know, I don't know. I haven't really done the math. It's going to be tough to do it. But you have to take off from there, David, as you say. You have to take off from there. You know, people are not spending money on trips, which comes to a lot of money, on restaurants and entertainment. Yeah. So they've got all that extra money to spend.
Yeah. Tell me about inventories, because that's something else you focus on, of course, because you need to know whether they're going to have to sell things for less than they bought them for, or at least a lesser margin. Are inventories going up or down, David?
The inventories are the most important part, I think, of this segment. Should be really inventories. Sales is one number, but I mean, as we saw at the end of 2007, we had high sales, but our model showed that inventories were too high. So we kind of forecast, as you might recall, January of 2008, a sort of recession potentially.